Hi there. I wanted to share this newsletter with you as a video and talk a little bit about the market volatility that has been happening. There's a few things that I wanted to share with you and some messaging that I think will be helpful. We know that volatility and investing go hand in hand, and market uncertainty can naturally cause panic. It can lead to poor investment decisions. But by recognizing short term market uncertainty for what it is, you can help ensure that it doesn't derail your long term plan. And so I know I sound like a broken record. You've heard me time and time again the last few quarterly letters that I write. It's stay the course. And this is no different. And we had a market correction back in 2015, and this could very well be another market correction. We're not quite sure. There's a lot of speculation. I get a lot of economic white papers across my desk. I get a lot of conversation about where are we in the bear market versus the bull market, meaning that bull right now is positive and we've had a 10-year bull market. So where are we coming up? Are we getting into more of a downturn or not? And some of the conversation has been that we still have another 2 years of positive returns, maybe another couple of years of that bull running and being aggressive. And all I can say is it does not matter. That is speculation. That it's not a matter of if there's a downturn, it's when, and we've taken care of that in our plan, and we've structured things knowing that there's going to come a time for it. And so today I just really wanted to share with you a couple of tips and some things to think about to gain perspective and know that this is an opportunity time right now. So I am going to share with you on my screen a couple of slides that I have that I think you'll find interesting. So bear with me here while I do a little bit of tech switching. So here we are. So right now, this is a cycle of market emotions, and this is a very popular, you're going to see this, it hasn't changed since, 10 years ago starting to take financial classes. This is the exact same thing. Generally, it's a sharing that I want you to know that investors feel a financial loss 2.5 times more than they do a gain, meaning that you remember the downturn. And so understandably, there's a lot of roller coaster emotions that happen through this. And I just want you to be aware of that. And right now on this market of emotions, we can see the point of maximum financial risk is at euphoria. And the reason being is because we've got a positive return. Things are feeling really good. People are feeling safe. And this is when they're most likely to invest. And so it's sort of like when I talk about jumping on the bandwagon after you've already seen the wagon go by, usually you're a little bit late. And then the point of maximum financial opportunity here is at the bottom when people are feeling despair. And this is when we can take opportunity. And it's what I wanted to share a little bit about today. It's about being aware of these emotions during times of volatility and helping you to think of this to stay on track and stay away from the cycle of a market emotion. And taking note of where you're feeling in here, because we know the best time to buy is that point of maximum financial opportunity. So then the next slide here that I want to share with you. This one is about, it's not time, it's timing. And so why you shouldn't automatically trim your investments when market uncertainty sets in. Because trying to time the ups and downs is a little bit like rolling the dice, and sitting on the sidelines can cost you. So if you're waiting for the perfect time to get in the meantime, you may have missed dividends, you may have missed interest payments. And this is an illustration that shows over a 10-year period, if you're not invested for only a small fraction of days when the market is performing at peak, it can substantially erode your savings. And so this is based on the TSX, December 31st, 2004 to 2014. And it's showing what happens if you stay invested in the gains. And sometimes it's referred to as the grin and bear it approach, and it can potentially translate into a better outcome for you. So being mindful, waiting for the perfect time to get in the market. You know, after 2008, sitting across from people with my mentor and helping people guide through that, we noted that if you stayed invested, if you listen to the advice, within a year and a half, you've seen our returns that we've had over the last 10 years have been positive in the teens. So this is the example of if you pull out during the downturn and you're waiting to get back into the market, you're sitting on the sidelines, you're going to miss out on the good returns and the dividends, and you're going to miss out on the best days of the market. And this is showing you that. So the next thing here that I wanted to talk about, and it's about chasing returns, right? It's not a winning strategy. It's not what is the flavor of the day? Where is the white papers that I talk about that come across my desk? Where is the latest new thing that we should be investing in? That's not a winning strategy. This is showing diversification. So what I really wanted to share is that this blanket of different colors is all it's telling us is that it's equated to not putting all your eggs into one basket. And it's diversification as a technique that mixes different types of investments in a portfolio to help smooth out the returns over time. So it's helping with risk. And this is showing us all the different asset classes over time and how they've performed. And what this is showing us is that you have to have a little bit of everything in your portfolio because there's different returns each year occurring. And if you're just stuck in one, you're going to be missing out on the returns over time. And there's not a pattern. And so it's an economic trend that we have to have different things in our basket. You have to have different colored eggs in your basket because they're going to help the negative correlation to one another. One's going to be up, the other one's going to down, and so we're balancing the risk. And as one type of security falls, another one's rising, so it helps offset that negative effect. And so all this is showing and illustrating is that this is a blanket of a diversified portfolio of different classes, providing the opportunity to participate in the gains of each year's top winner, because each year has a different winning sector, has a different winning asset class. And our aim is to lessen the negative impact of those at the bottom. And I just got an email from EdgePoint on Friday night at 5:30, and it was from the fund managers, Ty, of the global portfolio. And he was actually sharing with us that they've had some pricing that has gone down, but they also have cash within their fund, and they had 12 to 13% cash, and they're now down to 6% because they were taking advantage of this. So even if you're not taking advantage by increasing right now is an amazing time to increase your savings to put into your account. Your fund managers they have cash and they're looking for opportunity. They know what companies they want to buy because they're high value companies. They see the long-term value in those companies, but the short-term pricing right now is low. So they're able to take advantage of that. So my goal or my purpose of sharing this with you is I just want you to focus on the big picture. And I know you hear me say it all the time, just stay the course. And this is what we're aiming to do right now. We've talked about the what ifs, we've talked about the strategy of when things go down, and we know that there's going to be ups and downs. And right now, your fund managers are taking advantage of this. If you have extra savings or you have extra cash, you saw the emotional roller coaster. It doesn't feel good when things are kind of dipping, but right now is the perfect time. And if you have any questions, if you want copies of anything of the slideshow, just let me know. We can get that to you. And give me a shout and let's sit down and have coffee if you need anything. Thanks.